trading bell, my heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcasting.
Okay, I think stuff messed up, but oh well. I think stuff messed up. Morning, you guys. I redid OBS. The program that I use to live stream and to record is OBS. Never say should have. I mean, XLK is up 1.3%. It's Taiwan Semi. If you have the semiconductors. Morning, Troy. By the way, morning, Laurel, Scott, Chris. Taiwan Semi is... let's see. Taiwan Semi is up 8%. 8%. They can't keep up. And by the way, I'm in some pain this morning, but I'm just looking at my notes. I think I'm just going to do scans. I think I've got enough. I've got plenty to talk about, but let's see. Scans. Yeah. SOXL was the play. What is it up in pre-market? I just want to know. Ironically, it got you out yesterday with a 9% gain. If you were listening to the algorithm, it got you out with a 9% gain. Wow. But in pre-market, you're up 8% to 37. I think you're going to that 200-day at 43. So for Moneza, who's going to pipe in and say, is it too late? No. Yeah, kudos on that one. Desharge you. Kudos. I just gotta. There we go. Okay. I messed with the camera. I messed with a lot of stuff yesterday. So, ironically, COLV comes up in my notes. For those that are inverse Kramer fans, he dissed CLOV last night. Said stay away from it because he doesn't want to hurt any investor. It's got a strong buy in the quant, so you do what you want with that one. I do have it in my notes, Amir. I kind of feel like Kramer does. Hey, take your chances. It's one that I don't know that it fits my profile, but PSIX didn't. And look at that one went from 4 to 25, and that one's doing really well. GOOG and MPLX. There we go. Bitcoin and crypto. I think Bitcoin's down, so crypto, BITS. I think that's the leveraged ETF. Covered call ETFs. Nothing. Energy names. Nothing. Leveraged ETFs. URAX. Is that a uranium? Hold on. Title Trust. Let me see. URAX. Yeah, long uranium. It's up 3%. It was up 14% yesterday. Wow. Wow. Okay, so leveraged ETFs. Low cost Vanguard. Let's see. Nothing. Spider sectors. XLY. We have that one. Watch list. There's got to be a couple in the watch list. Nope, nothing. I mean, just everything's in a bull market, so it's crazy. Verizon. And European banks lowered. I just got to check the breaking news. I think the European lowered by a 1/4 point. So DXCM, Gilead, Dollar Tree, Micron, Verisk. Let's look at S&P. And you guys in the freaking Facebook group are going to make me have a big head. I am not that smart. I am really not that smart. You guys give me way too much credit. But I appreciate it. Okay, let's see. Let's go home. U.S. retail sales climb more than expected. The market's good. We'll just do this. Earnings. Consumer drives September retail sales past consensus. I mean, that's... UNH popped back up yesterday. It's back up at 571. I think you can use that 550 as kind of support there. MOH, which does come up. Do I mention it? I don't think I mention it. This is down 12%. It's in this amid rising medical expenses. It's kind of the this is an alpha pick from what I remember. I think it's one of the ones that's up big since I picked it. No, maybe it's not an alpha pick. Maybe it's an X alpha pick. But Humana, Centene, in the news. Okay. Latest news, or silver, Voyager announces iron ore, resilient consumer drives September retail sales. Soars, NASDAQ futures above winners and losers from September retail report. Yeah. And if you want stocks, I think I'll put that in there too. Okay. I'm probably going to be back in a second. That's Lamb Research. I mean, you know, I think it is an alpha pick. Morning, Mark. Yeah, and Troy, everybody seems like a genius in a bull market. And I am a perma bull. So, you know, Tom Lee, reason he's a genius in a bull market is we're going to go over there to the Facebook group because I'm going to, this is my personal one now. This is the business one. So we'll go here. There were some good discussions yesterday. Bum, bum, wah, 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 wah. That's the one that I want to show. I put my notes in there, so we're going to go over that. That's going to be the first thing we'll go over. Let's go to the 4 hour and we'll go to, wow, that one. The Qs. We're up, what, 1%? 496, 495. I mean, that, you know, we're just a whisper to that 500. Again, you know, the 496 was kind of the top where it pulled out here, pulled back a little bit. You know, so Ryan, that's probably, I mean, picks and shovels in the tech. Just go to here. Go to the link tree. Savvy Trader. Sign in. I gotta sign into this one. Go to Savvy Trader, and we're gonna get out of there. Go over here, and if you have a Savvy Trader account, you can go over here and just click on Savvy Trader, follow my trades, and that takes you to the corporate, and it's free. Ideas on picks and shovels in the tech sector. This, you want to compare it, you know, to SPY. I mean, year to date, this portfolio, which isn't a managed portfolio, it's just 100 shares of each stock. It's up 33%. SPY is up 22%. And you may say, oh, but the NASDAQ, you know, how do you compare against the NASDAQ? Well, you got 33 versus 19. So it's just about what you want, you know, and this has 20% cash, 16%, 16.64% cash. So it's not optimized whatsoever. But if you were looking for ideas, there's your ideas. Again, there is nothing that I don't think there's a lot of questions that you could ask me that aren't in the podcast. And part of one of the things I was talking with my girlfriend last night about was AJ Rocket Lab, go and read 7 Investing. I think it's 7 Investing. Go and listen to their podcast about Rocket Lab. Simon over here. I think they do recommendations. Let's see. I think they have premium options, but this is one of their recommendations. And I think they do a podcast on Rocket Labs, if I'm not mistaken. I'm not a fan of it, but Simon made total sense when he talked about it. I don't know enough about it. They're not making money, so it's not fitting into my portfolio. But if I were trading, Rocket Labs would be one that I'd probably feel comfortable trading. trading on a chart. So, yeah, I mean, that's the trade. Rocket Labs, they're not making money, and space is an expensive business. They probably will make money, but you're a long ways away. It's probably like, Palantir at $8 when they weren't making money. Now they're making money and they're at 42, I think. So, let's open up. But I am going to quickly do the podcast. Because we've got a lot to talk about. Uber made a bid for Expedia. Meta is laying off people. QQQ, time to take some profits. Drug is a stock that's up. Let's see. $4,000%, I think. Drug has gone nuts. Okay, he dissed Clove. So we're going to open up alpha.com. We're going to look at Clove. DPST and the other banks moving Okay. Nuclear went nuts. Import the uranium watch list. This is uranium. Because energy has just gone nuts. This was a great one. And then we're going to open up. Let me look for the Facebook group. We're going to put that there. We're going to open this, and then we're going to start out with this September sales. Okay. Morning, Scott. Yeah, AJ, I would probably, Rocket Labs is one. Chris is right. RKLB. It's just, go to Seeking Alpha, go to FinViz. I don't know if you have Seeking Alpha, but if you go to FinViz, it's free. RKLB. Nice and easy to look. Income, they're losing $176 million. They're losing $176 million. They have $326 million in sales. They have cash on hand of $1 per share. Well, how many shares do they have? 488. How much is it going to take to, you got 2 years of runway. They probably won't dilute you, but space is an expensive business. They probably need more than $488 million. So in a business like that, I would say, yeah, it's probably crazy. Target price, $7.80. Most recently, JP Morgan, they didn't put a price on it. But you don't see anybody with a price. Going back to even crazy days, you don't see anybody with an $11 price on this. You don't see anybody. And then you look at, where's the short interest on here? Short float, 19%. That's why you're at $11. So, again, Rocket Labs, trade it. It doesn't make money. It absolutely does not make money. So, top gainers, ATNF. Biotech, software versus up 243%. ProQ, KROO. Yeah. Okay, we're going to start out with the Qs. Yeah, they will. It's just an expensive business. And I don't... Again, you can hold on to it for a long time like Seven Investing does, and Shai Bular. He thinks that it's a great one for the long term. I don't follow it. I don't go that far into depth. I don't use rockets, so it's not something that's in my portfolio. But I will say the legitimacy of air and space. So today, to get a package from New York to Japan costs a hell of a lot of money to do it air freight. And if you're doing it shipping, it takes a lot of time. you put those two together, space is significantly cheaper to do something like that. So you see, SpaceX with the reusable rockets that they have, they could put payloads and put them up into low orbit and send them over to Japan at a much cheaper price than an airplane can. And that's the benefit of space. So you're going to see stuff like that happen. Okay. Morning, Scott. I am going to hit record now. And I think I got this worked out. I've been spending 3 hours a day just waiting for this damn video to process. So I hope that doesn't happen today. It usually takes 5 minutes in freaking iMovie, but I had to redo OBS because of this, so I hope it doesn't crash. Morning, Marco. Okay. Ooh, I even have a pause button. Good morning. It is Thursday, October 17th. It's Mellow Gary today because I've got a little bit of a back issue. I'm in a little bit of a mood. But you know what doesn't put me in a bad mood? Taiwan Semi blowing out earnings. Uber talking about buying Expedia. All the chip sector, buy the dip. SOXL was the play. Should be up quite a bit. We'll talk about the algorithm. We are going to, today is Alpha Pick Day. And so we're going to start out with Alpha Picks. Well, you know what we'll start out with? We're in a bull market. A resilient U.S. consumer drives September retail sales past consensus. We're in a bull market. Gap is up 2%. Best Buy is up 1%. You're seeing American Eagle up 1%. You're seeing a lot of these retail names go up. Oklo was up 41% yesterday. The nuclear stuff. We'll talk about uranium. We'll talk about nuclear. We'll talk about everything. But today, we're in a bull market. Honest to God, it's just a bull market. Doesn't make sense that rates went lower and that mortgage rates went higher. We're seeing that. Something's broken. Is something going to break? Well, you're in a bull market until you're not. Look at the Qs. The Qs are up 1%, 1.12% in the pre-market. Okay? VOO, which tracks the S&P, that's up 0.52. I've said it before. I do think that tech makes a rebound. I said it yesterday on Spaces. I think I deleted my notes. But if you just go over here to Seeking Alpha and you go to market data, and this is how you use Seeking Alpha, go to the market data, okay? Look at the U.S. equity sectors. And we can see yesterday, utilities was up. Yesterday, financials was up. Yesterday, real estate was up. Where was the tech sector? Bottom 4. Okay, communication services and community staples. Then you go to 1 month. What's tops? Industrial, financials, technology, energy, and utilities. Okay, utilities is lagging behind at 3.8%. Industrials are up 6.1%. When you go to year to date, what's leading? Utilities, financials, communications, industrials. Technology's lagging behind. Go to 1 year. XLF, that's financial, utilities, industrials. Take a look. All of those little low, the low-hanging fruit, the low multiple stocks, they're leading over 1 year. Now go out to 3 years, and you've got energy, which is up 57%. So you're perfectly happy, even though you've had a pullback, because energy is doing crap this year. But 3 years, if you just buy and hold, you're doing fine on energy, 57%. I would tell you to get the hell out of energy. Trade it. Don't hold it for 3 years. Trade it. Technology, you're up 47%. But when you go back to 1 year, it's in the top 4. This is how you build a portfolio that beats. Is you find a sector that's actually doing well and you stick with it. Now, 1 month, technology is 3%. When you just go year to date, technology is in the number 5 position. It's up 19%. Utilities is up 29%. Take a look at the 52-week range. When you look at the 52-week range, what's in the middle? The only one is energy. Then you got healthcare. Okay, everything else is up to the right. We're in a bull market. It's a little bit scary, but it doesn't mean it can't continue. That's how you find out that you're in a bull market. Okay, retail sales. A resilient U.S. consumer drives September retail sales. And if you want to know the winners and losers from September's retail report, here's an article that points it out to you. You can just go and look at all these stocks. Okay, but today I want to start this off with, you guys gave me a big head in the Facebook group. I am thankful that I'm helping folks. Alpha Pix is killing it. And if you didn't know, Alpha Pix, it is the fourth pick down here, Alpha Pix, if you want to beat the S&P. Now, you can bundle up. Remember, you can get Seeking Alpha Premium and you can get Alpha Pix. You save $150. But if you just want this portfolio, you save $50 off of that. Okay, it's 145% gain during the time when the S&P is up 51%. So again, the talk in the Facebook group was, one, they like Edward's options plays and they think I'm doing options. FYI, full disclosure, I'm still not doing options. Ed is trying to talk me into it. I really, really like his options plays. And when you're at all-time highs, buying those covered calls, it makes sense. What he's trying to do me to do, because it makes sense to buy and collect the premium. And then if you see a pullback, you just buy the stock because you were going to buy it anyway. But Alpha Pix, it's crazy how good this portfolio is. Now, I can't show you the portfolio. They've told me I can't. And people that, it wouldn't be fair to the people that have actually subscribed to it. But let's go over just a couple of them. Because the one they picked on the 15th of this month, it's already up 9%. 2 days, 9%. The one they picked on 10/1, okay? Because remember, you get a pick on the 1st and the 15th of each month. So the one they picked on 10/1, it's up 24.48%. The one they picked on 9/15, okay, the middle of September, they're up 11%. The one they picked on 9/1, they're up 14%. The one they picked on August 15th, they're up 27%. Of those 5 names I just mentioned, I have only mentioned one on the podcast as something I would be interested in. That's what's great about Alpha Pix. It's just this portfolio that I would never personally invest in. Now, they don't have all winners, and for me, they don't cut their losers fast enough, and that's just me. So. They have losers. They have Okta. They picked Okta on February 15th. That's down 15% since then. They picked AMPH in July of 2023. They're down 13% on that. There are 8 stocks in their portfolio that are losers. 3 of them are currently strong buys in the quant. So 2 of them, they're at risk of getting cut because they're at hold. But that's the great part about this portfolio. They tell you when to sell. There are certain rules that they follow. And so I really like it. I really, really like it. One of the things is that they show you, and I can't go in there and I can't show you, but when you subscribe to it, they show you the percent of what they're holding in the portfolio. So just say you want you take 10K and you want to put 10K into this portfolio, okay? I'm not suggesting you take your whole portfolio and put it in here. I'm suggesting you take a certain portion of your portfolio and test it out. And because, $10,000, if you're up 145% over, 2 years, that's suddenly $225,000 at $10,000. That's what that is. So your top holding in a 10K portfolio, it would be $850 of MOD. Okay? Your second holding is $690 of POWL. POW. I've gone over both of those names before, but it just gives you an idea of how you can build that portfolio. And their picks are continuing to do very, very well. And again, that's why I like these tools. That's why I sell them on Linktree. That's why I'm a partner of theirs. You can bundle up. Again, bundle up, get Seeking Alpha Premium, which gives you the quant, which means you can do your own research on all the stocks. Or you can get just individual, Seeking Alpha Premium and Alpha Pix, whichever one you want. But I wanted to go Alpha Pix because, again, in the Facebook group, they're talking about Alpha Pix are so strong and they're killing it. And I just wanted to share that because I think you hear it from me a lot. I don't think you hear it from the actual subscribers. So, Scott, thank you for posting that. Thank you for everybody who commented down below. I hope you're in that one. Now, the other tool that I sell is Trendspider. And you may not know this because I don't highlight this. But this is just an idea. With exactly 3 weeks until Election Day, Representative Jonathan Jackson just purchased General Dynamics, a major defense contractor. He sits on the House Committee on Foreign Affairs. Yes, this is a screenshot of what you see in Trendspider. Okay? You can see all of these political buys and sells. You don't have to subscribe to a separate service. You get Trendspider. It's in the tool. I don't use it. There are a lot of things in Trendspider that I don't use. I would urge you, use this link up here in Trendspider. If you've got another charting program, great. If you don't, use this link to get to Trendspider. You'll get to this page, okay? You can go through all of this stuff as to what they have. If it's not listed here, use the chat button in the bottom right and chat with them and see what they offer. Because this offer right now, for $53 a month, you get and what I do for you is once you sign up, you go back here to Linktree. My email's up here in the upper right. You just email me and I'll email you the 4-hour algorithm. I'll email you 65-minute algorithm. I'll email you the watch list. I'll email everything to you. It's simple. It's super easy. But again, I don't go over a lot of things in the tool because a lot of people just want my 4-hour algorithm. I think there's a lot more to it. And I think everybody has their likes and dislikes as far as what they want in a tool. So if you get my stuff, I think it's great. If you don't, hey, just make sure you have a charting program. That's the key. Now, if you have Trendspider, they highlighted yesterday, less than 3 weeks until the election and uranium stocks are cooking. As AI demands more energy, nuclear power is stepping into the light as a reliable energy source. They highlight the names here. Look at all the green. Okay, here's the key. If you have Trendspider, I will include this link in the newsletter, or you can just go to Trendspider's Twitter page, and you can click on this. When you click on this, you import this watch list into your setup. You can scan against it. You can use the 4-hour algorithm on it. You can do whatever you want. But it has a watch list of all the uranium stocks. That's part of the benefit of creating a watch list in Trendspider. You can scan against that. So let's talk about the energy stocks, because VST went absolutely crazy yesterday. VST was up another 5% or something. We talked about this one being one that if it pulled back 5%, I'd buy it. I don't like the valuation. And it kills me. I didn't buy it here on October 11th. It did pull back 5%. I didn't abide by my rule. And I wish I would have. That's a 20% pullback right there. I wish I would have bought it down here at 110. I think the low right here is 114. So I wish I would have bought it here at 114, 115, even 120. It's at 138 today. Okay? Is that the all-time high? Well, let's go look at VST. This is how you use Seeking Alpha Premium. Okay? All the tools are out there for you to use. The valuation for me is a bit much. I put it in the newsletter. Again, the newsletter is free. There's no reason for you not to sign up for this. It's free. Yes, I give paid newsletter subscribers a little bit of benefit, but it is free every day. So VST, I put it in the weekend newsletter. There is one that I like better based on the valuation. And that's the one that I've got on my watch list. Am I going to buy it if it pulls back 5%? This isn't necessarily in my wheelhouse, so it feels super uncomfortable. But if I buy it, I'll put it into Savvy Trader in the trading portfolio. I'll make you guys aware of when I buy it. You know one other one that went nuts? Oklo. You know which one I brought up a couple of days ago? Oklo. This was up 41% yesterday. 41%. Am I getting into this? No. The valuation to me, this one is a trade. And I wish I had traded this one. But NewScale Power hits all-time highs. Again, NewScale Power hit all-time highs on Amazon's plan to go nuclear. And they bring up Oklo. They bring up NewScale Power. They bring up Vistra. They bring up Constellation Energy, Dominion Energy. There's a bunch of names down here that they bring up that you can do research on. Okay? Simple stuff. Because it is. Somebody asked me about the picks and shovels. It's energy. The AI stuff, it's energy. And energy is one of those sectors that is beaten down. Just buy the XLE. You know, some of these companies are in the XLE. Buy the XLE. You're going to need energy for AI to take off. So, I think that one's a good one. Now, for anybody that is a Inverse Kramer fan, he dissed Clover last night. And I will quote, he said, stay away from it because he doesn't want to see investors get hurt. Clover's a top quant pick right here. And if we go over it, I don't know why he doesn't want people to get hurt. Now, if you go to Wall Street, their average price target is $3. It's trading at $4.26. The quant says it's a strong buy. It's had it as a strong buy ever since, let's see, this is $2, $8.13. So if you were watching this one, you said at $2, hey, the quant says it's a strong buy. You've doubled your money. You've doubled your money. It's ranked number 1 out of 10 out of healthcare. Now, what you have to know is UNH just said healthcare costs were killing them. MOH, which is an alpha pick, just said healthcare costs are killing. They're down a lot. Clover, not down. And I don't know why. Maybe it's the short interest. Short interest is 6.25%. But again, Clover interest for everybody out there. So another sector that has been going nuts, DPST. DPST in the 4-hour algorithm, this got you in on October 8th at $95, okay? $95. You're at 116 right now. When we look at a weekly chart of this, we're not even up to the 200-day. And if you look at this for the long term, right before the 2020 COVID, it dipped down. These are regional banks. These are 3 times levered regional bank. It came back. Then you had the banking crisis. Now, the distance between this and the 200-day, I think you have opportunity. Again, am I playing this one? No. I think you should trade this. And how should you trade it? Well, maybe in the 60. Let's see how the 65-minute. I don't know. This could be worse. Nah, you make 8.3% over 8 months. But if you bought this 8 months ago, you made 65%. Are regional banks overpriced? I don't think so. Now, what you have to worry about is the crap in the regional banks. I own IWM. And I have IWM because, hey, small and mid caps, they're just underperforming. So, if you want to trade, have you seen the psychedelics lately? This stock drug, DRUG, and here's a good list of all of the psychedelic names that you can trade because they have gone absolutely nuts. Now, yesterday pulled back, but if you look at 1 month, it's up 2,222%. That's crazy. Okay, over 1 month, 5 days, you're up 2,500, and that includes a 25% pullback yesterday, by the way. Now, the quant doesn't cover this. The market cap is 127 million. So it's not something that you're going to, oh my God, you look at the financials. What do they have? $1.1 million. They have no revenues, but they have $2.5 million in actually. It's a company that has no revenues, and they're losing $2.5 million just in operating income. Okay, that's the problem. They're not making money. This is an absolute trade. Nothing more than a trade. But again, if you want to trade it, you can get the charts in Trendspider and trade it. And if you want to know all of the psychedelic drugs, that drug makers that are out there, and you want to trade these, here's the article for you. It'll be in the newsletter for free. So the link will be there. Just take a look at it. Now, let's talk about DJT. I don't have an article for this, but I do have the stock chart because we just talked about a company that had $125 million, market cap. I forget what drug was. Let's see. Drug is a $127 million market cap. Now, DJT, because this one is up like 40%. Let's see. 1 month, you're up to 76%. 6 months, you're up 36%. 5 days, you're up 20%. This one has been going nuts. Now, everybody in Seeking Alpha says sell it. And the reason they sell it, here's what you have to know. They make, we'll go over to the financials so I'm not making this up. Trailing 12 months revenue, $3.4 million, okay? December 2023, last year, it was $4.1 million. So they're basically bringing in $4 million. I can tell you there are Waffle House locations bringing in more revenue than that. What do they spend? $125 million. Okay? $125 million. Earnings from continuing operations, they're losing $379 million. This is their balance sheet. That's what they're doing. Now, if you go back and you look at the market cap, remember, they are losing $400 million. Their market cap is $6 billion. This is a company that just launched a streaming service that charges people for movies that are currently free on other platforms like Pluto and other free streaming apps. There literally is no business model to this stock. The only reason they are investing in this one is because Trump will become president. And as his odds go up that he will become president, this stock is doing. Now, I don't blame anybody for buying this. If you're a Trump fan, go and buy it. Hold on to it because that's what's causing this to go up. There's a 5.87% short interest in this. So it's a little heightened, not huge. Nobody wants to short this. At its peak, this was a $79 stock. $79.38. And it's trading right now at 31. Do I think it's going back to 79? I don't know. But again, if you want to invest and trade in this one, just realize this. If you invest and you think, I'm going to hold this because he's going to become president and it's going to become a great business, it's not a business. There is no business model whatsoever. None. Trump has said he won't sell his shares, which is great because when you hold them, and again, his fans are holding these shares. That's what's causing this to go up. The second they dilute and they want to grift and they want to launch another coin or something like that, and they say, hey, we've only got, few million shares out there. We're going to issue another 4 million shares. Yeah, that's like Trump University diplomas. They're pretty worthless. So again, trade this one. Just be careful. Don't get sucked into the FOMO. Let's talk about QQQ because this is an ETF that actually makes money, that has good companies with good products, with good management and good earnings. Okay, QQQ, top 100 NASDAQ companies. This particular analyst, Sensor Unlimited, says time to take some profits. Now, they've said, what I want to point out is they've said this before. They had it as a holdback here on October 27th of last year. That's about a year ago. They've missed out on 42.17. Okay, 42.17%. They said it's a hold in April. They missed out on 11.7. They said it was a buy here on August 21st. They're up 1.74. The S&P's up 3.94. So maybe they're right, but they're saying it's time to take profits. Don't let the kind of noise hit you, okay? I think this one's a good one long term. Just look for an entry. Look for an entry. Again, the 4-hour algorithm provides you entries in this. The 4-hour algorithm, if you wanted to trade this over 24 months, it makes you 72%. Okay? Don't listen to somebody. Look at the charts. Make sure you know your fundamentals. Understand when you're getting in. The 4-hour algorithm just leads you in there. Okay? Now, Uber. Let's talk about Meta. First, Meta. Meta's laying off employees at WhatsApp, Instagram report. Make no mistake, this is AI. This is getting the work of one person that used to be 10 people. These are developers. These are people that Meta doesn't need anymore. They're trimming the workforce, and they're going with AI. And trimming the workforce is great, but make no mistake, this is also about bolstering up that AI capability at Meta so that they can write more code, they can do more things, and they can do it with less people. It's also about spending money with NVIDIA. So he's basically taking payroll off the balance sheet and buying more chips. That's what you're going to see. It's going to be huge because we'll go over it in a little bit. Taiwan Semi said they can't make enough chips for their they can't make enough. They literally said they can't make enough. Now, another core portfolio name, Uber. This is, remember, Dasha Kashkari, I think that's how you say his name. He was the former Expedia CEO. So, this is about Uber creating that super travel app. This is about Uber creating that major app that the rest of the world, each country has their super app. The United States doesn't have a super app. Uber wants to become that super app. And so, again, when you look at this core portfolio in Savvy Trader, and if you want to follow it, it's on Linktree. It's free to follow it. These are names that if you want to compare them against SPY, we talked about how Alpha Picks. If you don't want to buy Alpha Picks, use this portfolio. I wouldn't use the 100 shares per name. I wouldn't, break it down that I'm going to buy 1 share per name or something. I would tailor it to what your risk tolerance is. If, for instance, you say, hey, Lilly at 916, I don't like it at 916 because the valuation is too high, go and buy the XLV, which is the healthcare ETF. That has Lilly in it. Go and find an ETF with Lilly in it. You don't like Costco at 887 because it trades 50 times earnings. Go and find an ETF. I think it's XLP, Consumer Staples, something like that. Meta, XLK. You could, again, buy what your risk tolerance is. But if you can't afford Alpha Picks and you want to build a portfolio, this is it. And when I go over this, yes, I'm talking my book. Uber, I have in my own portfolio. Expedia jumped 7%. I don't have Expedia. I probably should. Uber's down 2%. Uber is an $80 stock until their earnings come out. Until their earnings come out. And I think probably pushes up. Because what we're seeing is the consumer spend. You're seeing these travel apps. Look at United Airlines was up like 11, 20% yesterday. It was up huge. Uber, you're seeing it blew right through that resistance line. And now it might be using it as support. It's down at 79. It pulled right back there. Right outside of its Bollinger Bands. Bollinger Bands pulled back. MACD, super high, crossing down. RSI, too high. Right before their earnings. They're going to make money. I think it'll be fine. If it pulls back to 70, buy it because it'll go back to 80. Good company, good product, good profits, good management. And don't forget, we just brought up Lilly. Don't forget about GLP-1s. Lilly, Gilead, Amgen started at outperform at Bernstein. Okay, Lilly's up 1% in pre-market. You can buy these. Again, look at the news and then look at the chart and look at the multiples. Look at everything that you can about a stock. And if you don't know enough about a stock or it doesn't feel comfortable, go and buy the ETF. We're in a bull market until we're not. And so I do think that we start to see some volatility around an election that most likely won't be confirmed on November 4th. And even if it is confirmed, there could be contentious, words. We could have another January 6th come out with allegations because that's what's been set up. But again, you want to be in this market. Even if there is some volatility, you want to be in this market. Now let's talk about earnings because everything's, this is up 8%. Taiwan Semi Source says AI demand boosts outlook, will not buy Intel Foundry. So they said they're not going to buy the Intel Foundry, which puts, again, Intel in a tough position because if they sell the foundry business, who the hell's buying that? Taiwan Semi doesn't want it. Taiwan Semi is the largest foundry business in the world right now, and most of it is in Taiwan. So if China, blockades Taiwan, we're screwed. The world is screwed. You'll see everything pull back 30%. But until then, make some money. This is up 8% in pre-market. It took everything. And here's what I want to quote from the Taiwan Semi conference call. Okay? The CEO just said, our customers' demand for exceeds our ability to supply. And that customer is NVIDIA. And so when we look at NVIDIA, remember how I said NVIDIA buying at 130 was a good one? Well, in pre-market, we're at 140. Now, when you look at Wall Street, what do they think? It's a $150 stock. That's still 10% from where you closed yesterday. It's still high. If you don't have exposure to NVIDIA, get exposure to NVIDIA. Okay, this is one that I've been pounding the table. I wanted to buy it on that dip on Tuesday, and I didn't get to it. I didn't buy it. I should have bought it. I think I was pennies away or something like that. It didn't hit the 130 price point. We can see what it hit that day. This day where it got pulled down, it hit 128. I guess I put it in right after it was, but it hit 128. That was a great buy. At 128, you're at 139 right now. That's a great, great buy. Market just opened up. We use this 120 as we haven't used it as support 122, but it's clear that was a good buy. Between 100 and 120 was a good buy. And I continue to say it. Now, Dan Ives, he says TMC monster numbers and guidance, very important data point for AI revolution thesis and growth looking ahead. As we said, ASML is background noise. TSMC is what really matters for tech and the AI trade. And yes, ASML, it's not AI chips. And even ASML said the AI portion of their business was very strong. So now we know AI is continuing. So what do we have today on earnings? We have Netflix. Netflix earnings after the bell. I may go live. Look for, if you have the Substack app. If you don't have the Substack app, just go and Google, go to Google Play Store or Apple Store and get the Substack app. I may go live at 4 o'clock to kind of talk about Netflix earnings. There's two things you're looking for: subscriber addition and ad tier growth. That's it. And again, if they say they're cracking down on passwords still and they still have room to go, this is an $800 stock. Buy it if it goes under 700. But if you subscribe to Netflix and it's at 702, just buy it at 702. $2 a share. Buy a couple shares of it or get an ETF that's exposed to it. The valuation is crazy. But the PEG ratio is under 2, 1.39. Their growth, revenue, 13% year over year. Levered free cash flow, 12% year over year. This is the only streaming service that's making money. That's it. So social request, Jack Walsh, he invested from Spotfiy. AAPL up to 1630 right now. Gap filled, solid sold half. Suck it, Ryan. Have a good one, Gary. AAPL was just a killer. Let's see where it is in pre-market. I think it's up a little bit. Or actually, let's see, AAPL. I put in an A. Why did I put in an A? AAPL here. AAPL is at Let's see. Let's look at the AAPL. AAPL is at Why is it still put in pre-market? Oh, come on, Trendspider. Trendspider likes to hold up on me for some reason as I get towards the end of this podcast. I think it's my computer with resources, but we'll look at the 4-hour. NVIDIA is just soaring at 138. AAPL. This is nuclear. Let's see. AAPL is at 1478. It is 1484, down 10%. Do I think that this one's a great buy? I'd be a little bit scared of it. Wall Street says it's a $10 stock. The valuation's B. I mean, they're not making money. That's the problem. So I would trade this one. Kudos to Jack for making money. Kudos to everybody else for making money. Congratulations. Now let's talk about scans. These are stocks or ETFs that show bullishness in my 4-hour algorithm. Now, XLY. This is consumer discretionary. This is what I invest in rather than owning Tesla. I own XLY. I just look for entries in XLY. You guys will remember, I think it was back here. I sold it like 190 or something like that. It's at 199 right now. If you look at a weekly chart of this one, the all-time highs back here in November, it's up above 200. So when you're trading at 199, you probably still have some to go. The Golden Cross happened here January 1st, and we've continued higher with a major pullback here in July, which hit the 200-day, used that as support. That was the buy at the 200-day. August 5th was the buy at the 200-day. If you bought at the 200-day, you bought at 166. You're at 199. What, a month and a half later, 2 months later? That's a good buy right there. But in the 4-hour, it does have another buy at 198. So you win. If you traded this one over 24 months, you had 26 positions. So it's about once a month. You have a win rate of 44%. Your average win is 6%. Your average loss is 1.68. You make 53% trading those 26 positions. If you bought and held, you made 42. Okay, energy. We talked about energy. One of the energy names that I have, it's an oil name, is MPLX. The reason I have MPLX is because they put off about 7-8% dividend. Now, I don't look to add to this one. I'm just kind of giving you, hey, if you trade this one and you want to trade it around the 4-hour algorithm, you make 11%. If you just bought and held this 24 months ago, you made 47%. Now, here's the key. You made 47% plus 8% dividend per year. So add another 16, 17% on that 47%. That's what you've made. MPLX, cross up in the algorithm. Google, we talked about this one. This one has an entry in the algorithm at 166. I don't know that you want to buy. I do think that 171 is a resistance level. I do think that this one is susceptible to the search revenue of all of this one. And you know, I tried making images in Gemini. They have now restricted your image creation of people to only Gemini 3. So I'm using it less. I'm a little bit suspect that they're kind of not, I mean, they're trying to monetize as much as they can. You do have to buy Google One or something like that. You do get extra space. You get a bunch of different things. I don't like it. I don't like having to pay for stuff like that where I can get it for free. So, Verizon 43. Buy at 43.86, 43.91. That's where you're trading. You make the same if you trade, whether you trade or buy and hold on this one. Is this one a good buy? I don't know. I mean, that 200-day still moving negative, but that 50-day moving positive. And Verizon, it's not an overly like crazy thought that this is a, the valuation, not bad. PE's 9. Sector median's 13. You know, it's just this is like space. It's an expensive business to be in, and it's a race to the bottom. They have to subsidize the phones. They have to lower their prices. They have to compete against AT&T and others, T-Mobile. So this is a tough one, but it's in there. There's a bunch of others. One that I want to point out that has an entry is URAX. We talked about uranium stocks. This is a double leveraged ETF on uranium. Okay, the initial buy-in here was at 1174. Now, it's only been in existence for 4 months. We talked about triple leveraged ETFs over the weekend in the newsletter. I did a little podcast about it. If you want to see it, it's on. It's right here. It is one of the recent posts. You can go see it on here. But it is one. We talked about how these things come out. This is double levered against uranium. Now, the algorithm, again, makes you 33%. You had 3 trades in 4 months, okay? 3 trades in 4 months. Your average win 55%. You're still heading up there. It has another MACD cross up. You know, RSI is a little high, but if uranium and nuclear are going to still go nuclear, this one will run. If you have any questions, hit me up. Everything's here on the link tree, linktr.ee/daily stock pick. I didn't do a full ad. This is just about how to set up a portfolio. And I think that's the main focus of this podcast was, hey, there's a lot of opportunities out there to set up your own portfolio. Just make sure you're doing it in a smart way. You can pick stocks from the Daily Stock Pick Core portfolio. You can see how it performs against the S&P. You can do it by buying alpha picks and getting a specific set of data-driven stocks every month. And they tell you when to sell. And it covers multiple sectors. Again, you get access to the full portfolio with the percentage of what each stock is in the portfolio. And you can build your portfolio like that. You can, try and trade DJT. You can try and trade the psychedelic stocks. You can trade the tech stocks. You can buy XLK. You can buy XLY. So this wasn't just about ads. If you're thinking that this was just a whole podcast about ads, you're not listening. So work on your listening skills. This was a complete podcast about your portfolio, where we're at in the bull cycle, what risk tolerance you want to take, and how you go about it. That's how you set up your system. And that's how you set up your process. Make sure you're doing that. Make sure you know where on the charts. You know, for Apple, Apple's the main portion of my portfolio. I am well aware that Apple is at $230. I sold about $20,000 worth of Apple yesterday. The reason is because I want this 228 and 230 to turn into support. I'm willing to take that $15,000 off the table and then buy it at a lower price. This is in my retirement portfolio. It's not in my brokerage account because I don't want a tax event, but I'm willing to do that because I know exactly where Apple is. And not necessarily on the chart, But then I go over and I use Seeking Alpha and I say, okay, what's the multiple of Apple? They're trading at 34 times forward earnings. Now, they're going to print cash. They're going to get, do another record buyback of cash. They're going to announce that the iPhone 16 is selling. They're going to announce that the AI stuff is coming out there in March, and that they see future growth of the iPhone. They're not going to give specifics, but they better have revenue growth continue. If you see revenue growth go down, this is a $200 stock. And you know what? My sale at $230, I'll just buy it back at $200 in my retirement account. So again, make sure you're setting up your portfolio with thought process like that. And if you don't want to go through those processes, again, alpha picks. That's why I'm such a strong believer in alpha picks. And yes, I was a subscriber before I became an affiliate. So if you have any questions, hit me up. I'll talk to you guys later. Bye. Okay. Let's look at your comments. Yeah, Mike, I think, and that's what I'm getting taught. Full disclosure, I talked to a firm. I've got 3 firms that Fidelity recommended to me to talk to about options and how to make money with my current portfolio and things of that sort. And they would manage it. And so there's a fee involved. And like I told the guys yesterday, after almost 40 years of managing my own portfolio and managing things, I don't know that turning things over makes sense. Ooh, hold on. Did I just record that? Oh, okay. It does have the delay. It's going to be hard for me to turn over control. So, but I do think that I need to learn options. D-Man, what's up? Morning, Hunter. Yeah, energy, Generac has been good. Generac is one of those, let's see, GNRC. Generac, if you look at the pop down here, it's on its way back. It hasn't traded below its 200-day since 2017. This is a weekly chart. And so I think you're seeing that one. This was the run-up. This was during the pandemic when everybody got backups because nobody liked being home without air conditioning. And you just saw it pop back down. But if you look at the price pre-pandemic, it was $112. And if you go back, GNRC, I think they had some problems with supply chain and stuff like everybody does. The valuation, 26, 27, it's a little bit high with their growth. But, hey, it's an industrial. So that's how it does 1 year against it beats the S&P over 1 year, doubles. Wow. 3 years, Generac is down. So 1 year, you've been doing really well. And I think you're in that for a year, if I'm not mistaken, D-Man. I mean, I'd say works at Home Depot, saw people buying a bunch of generators and said the price doesn't match, and he's been in it long term. So, and I don't think he's been in it long term to the point where, way down. But yeah, Adobe is strong in the AI scene. Let's see. I'm going to look at my Fidelity account. I'm not up that much. It's because Apple's down. That's why. I'm up. But the market has realized, oh my God, we can't get that hot. Okay. It's 9:46. I'm going to get out of here. I'm going to try and do this pretty quickly. But let's look at Netflix real quick. The problem you have with Netflix is, I don't know, did something leak? That's a big move down. I think under 700 is a buy, but I don't think you buy it right now. I mean, doesn't look like there's news. The problem you have with Netflix is I think a lot of people will sell today before earnings to take profits. You're up 41% year to date. I mean, look at, just year to date on Netflix. Look at it against the S&P. 1 year, look at it against the S&P. It's almost 3 times what the S&P is over 1 year. You look at 3 years and the S&P is killing it. So from a percentage standpoint, 5 years, it actually kills the S&P. Then you go long term and it destroys the S&P. Destroys the S&P. So I think Paul, it's really about your time frame. For me, anything under 700, I think is fine. The valuation is extended. You're paying 36 times forward earnings, what they're expected to make. You're paying 30. Let me reiterate that. You're paying 36 times what they're expected to make. Okay, the S&P average is between 15 and 20. We can call it 18. Okay, but a lot of these tech names are extended. At the PEG ratio, which factors in growth, and you can read up about the PEG ratio. It's price to earnings to growth ratios, evaluation metrics for determining the relative trade-off between the price of a stock, the earnings per share, and the company's expected growth. It's 1.39. Typically, you want that under 2. And then you're fine paying for that valuation. This is best in breed. Now, when you look at the revisions and you say, well, what do the experts think? Well, over the last 90 days, 36 experts have brought their earnings per share up, 3 down. 21 have brought the revenue up, 17 down. So it's going to be the revenue that they get from that ad tier. And you can see it, if we go to this lead story. Net subscriber addition, ad tier growth in focus. And that's going to be the biggest thing. So I don't know that it's a great buy. I think it's a good buy. I'm in at about 300, I think is my average purchase price. So if I were to add more, I don't mind paying after the earnings. But if you're not in it, it's the number one streamer. And look, your RSI, the algorithm just got you out with a 3% gain. The algorithm makes you 143%. Buying and holding makes you 211 over the last 2 years. And on the 4-hour, the MACD, right on the oscillator, heading down. So the algorithm got you out. The RSI is at, 34. You go to a weekly, and it's still a little extended. So it depends on your time frame. But, and yeah, I mean, Hunter, take that thought process where they say, hey, our company is in medical, and we're using Adobe to read documents. Guess who they're paying? Adobe. So, Adobe is a little bit expensive. You look at this weekly chart, and it's pulled back significantly. Significantly. You got this little, turn down to the 50-day. You're below the 50-day. How many times have you been below the 50-day on this one? Once, 2018. Twice, 2020. 3 times, 2021. And then you had this entire year below the 50-day. And you just started to pull back below the 50-day. Now, if you get under the 200-day, which was 446, and you're trading under 500, probably not bad to pull the trigger on something like Adobe. Now, it's software, so it's easily, AI, they could be copied. It's not like some. I know a lot of people who are using Adobe are now using DaVinci Resolve because it's free. For video editing, 62 out of 191. I do think that they have an AI advantage. I think they were very quick out of the gate with AI. So profitability, you look at it, 88% gross profit margin. I mean, that just means that they have pricing power. So the growth, that's where you got to question. You know, their leverage free cash flow, they're spending so much money. They're losing 9%. But again, revisions, it's kind of okay. The revenue is where they're getting killed. So, okay, I am out of here. You guys have fun. See you.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.